Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, looking at the market rundown, SPY, IWM QQQ, and we're also going to look at XLF and XLK, the most two important sectors in my opinion. At this time, since the election, it has been riding or driving the market to the upside. And I do believe that if we are to see any significant market pullback, it's going to have to start here in these two sectors. And XLF and XLK are the biggest holdings in SPY, and XLK is the technology sector, and QQQ is more than 50% technology stocks. So these two sectors certainly have a very big impact on the overall market outlook. So on XLF here, look at this 100-day moving average support, and we keep holding this level. We keep dipping below it and holding it. So 1, 2, 3, 4, 5 times we have closed above this level, maintaining that support. If we lose that level, we will start to look for some more substantial pullback. But at this point, I'm watching our top of the bounce, and you can see we had a much more bearish reaction to the FOMC back in March here on the financial sector than anything else we're going to be looking at. So this is the weakest sector out of the two, and looking at 23.99 and 23.96, very clear resistance. The bulls have to get over that level to see this bounce continue to play out. And in terms of support, the lowest price on this pullback right now is 23.33, where the bulls are trying to form a higher low. If we cannot form a higher low and 23.33 breaks, we're looking down at the lowest price we've seen on the dump of FOMC, and that was down at 22.98. So the bulls are still holding on just barely. We have an inside bar on Thursday. If we see a bearish break of this inside bar, that's a nice signal. As the preceding candlesticks, we're seeing downside momentum. But as of right now, we are watching this 100-day moving average support very closely. The weekly time frame did not confirm the bullish reversal candlestick from last week. So we had a clear little bearish reversal doji, confirmation and pullback, increasing bear volume, and we lost this middle Bollinger Band weekly support. The last time that level was resistance was back in June. So this is now 9 months. This has been support, and it is now lost. We have a bearish TCG cross with the 4-period exponential crossing over the 8-period to the downside. We had a bearish MACD cross up at the top, and we are, like I said, not confirming that bullish reversal candlestick from last week. So from the weekly perspective, the bears are still in control of the short term, looking at the past month. Looking at the overall uptrend, we have support here of 22.77 and a higher low of 22.98. If we break 22.77, that will be a significant break in this uptrend, and we will shift the momentum and the direction we're looking. If we break 22.77, we'll be looking for lower highs and lower lows to begin forming on the weekly time frame. So watching very closely this weekly time frame, XLK lost its middle Bollinger Band on the daily time frame for the first time in about 3 weeks, and we had held it 4 days in a row and then lost it. So we're starting to see a little bit of weakness creep in here. And what's been going on with these sectors is one day to the next, we'll pretty much see if the financial sector is really weak, we'll see the tech sector hold up. If the tech sector consolidates, we'll see the financial sector hold up. And they're really picking up the slack for each other to keep the S&P 500 strong. If we see both of them start to give us signs of weakness, we know that the S&P 500 is going to be following along as well. So support right now, we're looking at 52.87 on XLK, and then the low of the pullback is down at 52.33. We're maintaining higher lows as long as we hold 52.33, but starting to see a couple signs of weakness, and we're going to be watching the weekly time frame here as well. Bearish reversal candlestick 2 weeks ago, not confirmed, or 3 weeks ago, not confirmed 2 weeks ago. Bearish reversal candlestick here again, closing in on a potential bearish MACD cross. Watching exponential support. We've been holding these exponential supports ever since December. And if we lose those levels, we will know that some consolidation is coming, and it will be very normal, healthy consolidation. RSI is up in the 70s. We have not seen 2 red weeks in a row since the election, and we're due for normal, healthy consolidation. So watching to see a red week would confirm the bearish reversal candlestick and have us looking at 52.33 support and these exponential moving average supports, which we will update first thing on Monday to see where those levels stand. So SPY, bulls get a victory on Friday, and after the bombing in Syria over Thursday night, the dump in futures, really no effect on Friday. I would look at this candlestick and not think anything was going on fundamentally, geopolitically at all. So in my opinion, in order for this whole Russia-Syria thing to really have an impact on the market, it's going to have to take significant escalation because we saw no follow-through. We saw no bearish action. So we have an inside bar, pretty indecisive doji. We have rejected from the middle Bollinger Band 2 days in a row on the back test, trying to get those levels, that level back as support. That's resistance at 235.52 and dropping. We've got a inside candlestick to break, and look at the preceding action. It was a bearish candlestick, and then we've got this inside bar forming. So if we see a break of 234.64, we're going to be looking down at the low of last week of 233.91. The 50-week moving average support held the low of the last dump. That level is going to be lining right up with 233.91, and we'll be watching that support very closely this coming week as it continues to ascend and approach the price. The weekly time frame on SPY, same kind of thing where we had a bearish reversal doji. We confirmed it. The bulls showed back up, kept these exponential supports. Now a little bit more weakness, setting a lower high. And again, this March pattern is lower highs and lower lows. And we just set another lower high. And we've got this downtrend resistance line to be watching here on SPY. And that is going to be my guide. I am looking for the bears to remain in control of the short-term daily time frame unless they can get over that downtrend. So on the weekly time frame, same thing with the exponentials as we're looking at the technology sector. Those exponential moving averages have been support since the election. We have not seen 2 red weeks in a row. Well, actually, we saw a little red week here, but that was certainly not a lot of weakness back in early January. If we see a more convincing red week, we will lose exponential weekly support. We will see a bearish MACD cross, which is about to follow through, and we'll be looking for some further consolidation. IWM did not see convincing confirmation of its bullish reversal candlestick from Thursday. We closed up at the high of the day, saw some follow through to the upside, but we rejected from the daily middle Bollinger Band of 135.82. So both SPY and IWM are rejecting from their daily middle Bollinger Bands. Looking to see the lower high pattern here as well. We've got the high, lower low, now just another lower high, higher low, so the range is tightening, and we're going to be watching the range right now of 133.83 support and 138.17 resistance, and we're closer to support than we are to resistance. Weekly time frame for IWM, bulls have been trying to fend off a bearish TCG cross of these exponential moving averages. We've come very close here, and we're going to have to see further downside, but we are on the verge of seeing the 4 period cross the 8 period to the downside. Last time that happened, we saw 3 weeks of pretty significant pullback back in October, so keeping an eye out. If we lose that level, we are going to see some further pullback, and we've got support down here at 132.74, and we did break that level at 132.40, but you can see on the weekly time frame the bulls buying that dip 2 weeks in a row off that double bottom of 132.40. If we break 132.40, we're going to start forming lower highs and lower lows on this weekly time frame, and it's going to change the trend in the short term. So IWM is on watch because it has been one of the weaker names in terms of the amount of consolidation we've seen over the past 2 months, and if it starts to break this higher low pattern on the weekly, we will be looking for weakness in these other markets as well. QQQ has been the strongest. We hit an all-time high on Wednesday, holding the middle Bollinger Band, some indecision candlesticks on Thursday and Friday, but it would require a break of 129.40 in order to see a lower low and some more significant bearish action. You can see the weekly time frame, just like XLK QQQ, extremely strong. We have not seen 2 red weeks in a row since the election, holding exponential support. So you can see that QQQ, XLK, and SPY on the weekly time frame are all relying on these exponential supports to continue holding. Bearish reversal candlestick 3 weeks ago was negated 2 weeks ago. Another bearish reversal candlestick this past week, and if we confirm it, we will start to lose these exponential supports, and we'll see this bearish MACD cross start to follow through. So basically, in summary, we're seeing some clues that there is some consolidation occurring, and if we start to lose these weekly supports, we will look for that consolidation to be a bit more drawn out and a bit more significant. So there's no panic, there's no red flags in terms of long-term holding, long-term positions. We're just looking at the short term, seeing the signs of consolidation, watching the lower highs and lower lows on the daily time frame from March, and looking to see if there's going to be some more significant pullback coming. And as of right now, because of that lower high, lower low pattern in March, it's up to the bulls to prove themselves to get back over those resistances, break the lower high pattern, and head back towards the all-time highs. Otherwise, we will be cautious and looking for some consolidation. I appreciate you watching. I hope you have a great rest of your weekend, and we will see you soon.